And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Soros Fund Management, the investment firm led by billionaire George Soros, is making waves in its recent portfolio adjustments. In a regulatory filings revealed this week, Soros Fund Management disclosed significant changes in its investment strategy. The firm stunned the market by liquidating its stake in New York Community Bank Corp, which sent shockwaves through the financial sector. The decision comes after Soros Fund Management previously held approximately 1.5 million shares in a regional lender. Simultaneously, the fund made a strategic pivot, acquiring over 33,000 shares in the prestigious investment bank Goldman Sachs. In a parallel move, the hedge fund Third Point also increased its stake in Goldman Sachs, purchasing $250 million in shares as of March 31st. These disclosures made through regulatory filings are closely watched by investors for insights into the market trends and strategic moves made by influential players. What are they doing? They are following the money. Also on Follow the Money, Warren Buffett's Berkshire Hathaway has made a significant move in the insurance sector, disclosing a massive 6.72 billion stake in Chubb. After months of speculation, the fund officially confirmed its new investment in the insurer, Chubb, according to regulatory filings released on Wednesday. As of March 31st, Berkshire Hathaway held 25.92 million shares of Chubb, propelling Chubb shares price to a record high in after hours trading, surging 6.3% to $268.96. Analysts note that Berkshire's investment often trigger positive reactions as investors interpret them as a seal of approval from Warren Buffett himself. Chubb's focus on property casualty insurance makes it an attractive investment for Berkshire Hathaway. The fund began buying Chubb in last year's third quarter and had obtained a U.S. Securities and Exchange Commission permission to temporarily keep its purchases confidential. The Chubb investment was revealed 10 days after Berkshire unexpectedly disclosed it sold about 115 million shares of Apple. That's all for Follow the Money this week. Thank you for joining us. Join us again next week on the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly series coming to you every week on I'm the Trader, where we reveal the secrets of achieving consistent weekly returns in a fast paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and achieve remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams, one week at a time. Also, we love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everybody on this planet needs access to it. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade a week, trading one model, risking no more than 2% of your equity, looking to make a 1 to 3 risk to reward. So you're risking 2% to make 6%. Every week, I'm becoming more confident in identifying the model and executing without hesitation. My trading is becoming mundane and repetitive. There's no longer that excitement when I get in a trade or that butterfly feeling when I get in a trade. I'm becoming more focused. I know what I'm looking for, and I'm only looking for that. I don't engage in the market until I see what I'm looking for. As I develop and grow as a trader, this series and information provided will improve. Everything I share here is how we trade at I'm the Trader. We had a total of 4 trades this week for a potential return of 24%. But remember, our target for the week is 5%. You only needed one of these trades in front of you to pan out. But before we dive deep into this week's trade of the day, let's talk about a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from 3 things. One, understanding the market and how it operates. Two, having one trading model that has IPTA signatures. And three, having a plan and process that you follow every single day. Successful trading, guys, is very boring. You're doing the same thing over and over and over again. Just like this information, you're hearing the same thing over and over again until one day it's all just going to click. This is the 3 step process I use to take trades weekly. Step 1, condition. This is based on a higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2 because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for setup. And you don't even have to pay for that one, okay? That one is free. We have step 1, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your conditions going into the week. Several factors go into determine the higher time frame bias. However, there are only 2 options. Is either the higher you're expecting the weekly candle to go up or go down. Step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stalk setup on calendar day and after the news release. The optimal days to trade this week were Tuesday, Wednesday, Thursday, and Friday, because those were the days we had high to medium impact news. Secondly, we look at what sets up the trade. What does it look like? This would be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and you're hunting long formation. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. We're waiting for a swing high to form to anticipate setup. If your weekly analysis suggests that price is going lower, then you're in a sell program and you're hunting sell formations. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. We wait for a swing low to form to anticipate execution. Step 3, executions. Once the stage is set, when and how do you execute? For execution, we're looking to enter on a fair value gap or order block created in the displacement leg that caused the market structure shift. You have 2 options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit, meaning the one closest to price. Your stop loss will always go at the swing low for a buy and at the swing high for a sell. You're always going to be targeting a 1 to 3. It's important to know that both models will form in the span of a day or a week, but your higher probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Range. Where are we within the range? Are we in the upper, mid, lower quadrant with respect to buy or sell? Liquidity. Is there liquidity or does price create liquidity right in front of the fair value gap or order block? Once price takes this liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.25 fib extension, I'm no longer looking to enter the trade. Remember, trading is a solo sport. You have to make it unique to you and your personality. What may work for me may not work for you. All this sounds complicated if you're hearing it for the first time, but it's really simple. You just need to keep showing up on the charts and look for it. Now let's head over to the charts and look for it in price action this week. Welcome to Tracking IPTA. This week we had beautiful price action. I was actually in a trade that happened to be the beginning of a beautiful buy side delivery. This is what ICT call a one shot, one kill trade. And although I didn't hold throughout the whole week because I'm a day trader, I'm looking to get out in a day. It was amazing to watch it happen in real time on my charts. Another week of sticking to the plan and processes. Just to show you guys, I do practice what I preach on this series. As you can see, I only took one trade this week on Tuesday and I was done trading on this account. Remember, our goal is one trade a week, risking no more than 2%. The risk on this trade was 1.58% at $395, ended the week up 4.7%, which is $1,185. And overall, we're up on the account 17.4%. In dollar amount, we're looking at $4,360. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means two things. You won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspects of trading, the most important tool you need to track down IPTA. Now remember, even though I'm going to show you both buy and sell setups, it's important to note that your high probability trades will form in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame condition is bullish, and vice versa. It's just that your probability of winning reduces significantly when you go against your higher time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going in this hunt with the understanding that you guys have already arrived at your higher time frame directional bias. This is just a hunt for purely just setups. To the hunt. Let's go. First up, we have Tuesday, May 14th, trade of the day. This was the trade that would have netted you your 5% for the week, like it did me, and you would have been done trading for this week on this particular account. You could have decided to take the rest of the week off to do whatever you wanted to do. But if you're a maniac like myself, you'd be in there hunting for more setups, but on a different account. Thank me later for that tip. Tuesday AM session buy formation. We have news, as you can see, coming out at 8:30 and 10 a.m. 10 post 10 a.m. is when we're looking for the signal to enter the market. We have price trade below kilo, displacement higher causing the market structure shift. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form and then we're anticipating execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the EQ of the range. And as you can see, we have a fair value gap busy right in here at the 50% level. You would have been tagged in this trade at 1016, breaking even at 1024. Like I always say, you don't have to break even. Breaking even is just something I do personally in my trading. You'd be taking out this trade at 1 to 3 at 1025 for a total time of 9 minutes in this trade. Drawdown on this trade was 63 ticks for 6% bagged and tagged. For A1 setups, we're looking for 2 or 3 of these factors to be present, so between time, range, and liquidity. And for this trade, as you can see, we had the time aspect, which was post 10 a.m. session. We had the range. We're in the lower quadrant, middle to lower quadrant of the range for a discount for buys. Okay, so we had two factors coming together to make this a high probability trade. Thursday, May 16, trade of the day breakdown. We had a AM session, sell formation. As you can see, we had news coming out in the morning. In the AM session, we had price trade above a key high, displacement lower causing a market structure shift. We're waiting for the displacement leg has a fair value gap CB near the swing high. We're waiting for a swing low to form to anticipate execution. We're looking to enter on a fair value gap created in a displacement leg near the 50% of the level. Okay, as you can see, we had the fair value gap CB at near the 50% right here. You would have been tagged in this trade at 11:28, breaking even at 1:21 for getting out the trade at 1:22 for a total time of 1 hour 54 minutes in this trade. Drawdown on this trade was 63 ticks for 6% bagged and tagged. And factors to consider for high probability setup, like always, we're looking for 2 out of the 3 to match up. So on this trade, we had the range factor. We had time factor, which was AM session. We also had the range. We're in the middle to upper quadrant of the range. Also, liquidity is created in front of the CB. So we had all three things for high probability setup matching up on Thursday, May 16th, making this A plus setup for 6% bagged and tagged. So we had another trade of the day form on Thursday. This is the second week where we've had two trades on Thursday. I don't know if that means anything, but I just noticed that. So Thursday, May 16th, trade of the day breakdown. We had another sell formation form. As you can see, we already had the news come out in the morning. Price trade above a key high. Displacement causes a market structure shift below the key high. We have a fair value gap CB in a swing high that caused the market structure shift. We're waiting for a short-term low to form in the market structure to anticipate execution. For execution, we're looking to enter at a fair value gap at or around the zero point 0.5 level of the fib of the range. We had a fair value gap CB right at the near the 50%. So you would have been tagged in this trade at 239, breaking even at 412, getting at that trade at 433 for a total time of 1 hour, 54 minutes in this trade. Drawdown in this trade was 48 ticks. Your stop loss would have went above this swing high because this is the swing high that led to the market structure shift. For a 6% bagged and tagged, factors to consider for high probability. Let's see what we had to make this a high probability setup. We had the time factor, which is the PM session, check, and then we had the range. We're in the middle to upper quadrant for a sell, in a premium for sell, check. We also have display liquidity created in front of the CB, checkmate. 3 hour 3, making this a plus setup. And as you can see, netted you 6% for the day. Well, 12% if you count the morning's trade. So two trades on Thursday, AM session trade and a PM session trade for a 12% bagged and tagged. Second Thursday to be making 12%. Note that one. Friday, May 17th, trade of the day breakdown. We had a AM session buy formation form. As you can see, we had high medium impact news coming out at 10:15. Post 10 o'clock is when we're looking to enter the market. We had price trade below a key low, displacement higher causing a market structure shift. The displacement leg does leave a fair value gap CB at the swing low. We're waiting for I have that fib over there. We're waiting for a swing high to form in the market to anticipate execution. And for execution, we're looking to enter on a fair value gap created in a displacement leg near or at the equilibrium of the range. And as you can see, we had a fair value gap busy right here at the equilibrium. You would have been tagged in this trade at 10:17, breaking even at 10:23, getting out that trade at 10:29 for a total time of 12 minutes in this trade. Drawdown on this trade was 16 ticks for a 6% bagged and tagged. All right. Let's look at factors that made this a A plus setup. As you can see, we have the time factor is post 10 a.m. We have the range factor. We're in the lower quadrant, a discount of the range for buys. Also, no liquidity was created, but we do have 2 out of the 3. We're making this an A plus setup. I was in this trade this Friday. I think I manifested bad luck on Fridays. I usually don't like trading on Fridays, and I've manifested bad luck on Fridays. Let me break down this trade, the reasons behind I go in this trade. 9:30 to 10 o'clock. Opening range, I'm not trading. I'm looking to see what price is doing. As you can see, we had price trade below kilo, displacement higher, setting up the stage for a buy. The reason it didn't pan out for me on this trade is because usually I'm looking for the signal to happen post 10 a.m. then to enter. But the setup was prior to 10 a.m. So I was going by this market structure shift up here and I waited for the swing high to form after 10, comes down into this busy near the swing low. I go in here, stop loss below the swing low, targeting a 1 to 3. My 1 to 3 target was right here. And as you can see, price doesn't hit it. That's because that wasn't the trade for the day. The trade for the day was the one I explained earlier. I broke even on that trade, but another reason why I'd say don't trade on Fridays if you've already made money in the beginning of the week. Anyway, that'll be all for tracking IPTA this week. I hope you learned something. See you all next week. Every week, we have shown you one or more opportunities that could have netted you at least 5%. With a 2% risk, if you had taken all four trades this week, you'd be looking at 24% for the week. But remember, we're only looking for one trade that will net us 5% for the week, and we're done trading. As traders, we must be content with enough, and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. Hopefully, you found this one insightful and you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want, and too many of us fail at it. 90%. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There is a way to succeed at trading. Trade of the day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.